Indian expats in USA may is one person has asked me a simple question. He has a mortgage at 2.75%, and he has the money in hand. So should he pay off his mortgage or not? So here's the answer to that. You should not pay a mortgage. You should not pay the mortgage which is less than 5 to 6% at 5%. It is definitely less than 5%. I've given a formula around that. But for now, you're very well qualified. You should not pay it off. Rather, what you should do is you should use that money and put it in S&P 500. Okay. Now you should not put the entire money in S&P 500 because S&P 500 is maybe. So you understand the high level strategy. A lower level strategic detail is, instead of putting all the money at once in S&P, you put it in some kind of money market account in Vanguard or put it in an FD. So break this into, let's say, I don't know how much money it is, but you need to see, let's say if it is, let's say 500,000, then I would break it down into five year pieces, 5 pieces. So 100,000, 5 year into 12 pieces, 60 pieces basically. Break it into 60 pieces, make 60 FDs. This is a foolproof method. First FD of 1 month, second FD of 2 months, third FD of 3 months, fourth FD of 4th month, so and so forth till 60th FD. Okay. I'll tell you how to reduce this headache. But still, if you can do, this is the right method. This is the long and right method, but this is the right method. You should never invest in S&P 500 all at once. You should break it down into multiple years. Basically, that's the point. And how many years? It depends on how much money. So I cannot answer you that. But you understand the basic concept, and then you may be able to apply mind and may be able to come out with a better strategy for yourself. But here's a high level, right? Then every month you break the FD and invest in S&P 500. There is a Vanguard, this thing, you open the account in Vanguard. I'm giving you a little bit specifics also. Open the account in Vanguard. It has a very less expense ratio. There's an S&P 500 index in that. Find that out. I'm not giving you a specific name. It's okay. You should do the basic research. I'm giving you a strategic action plan and solving a strategic issue of yours. And I'm telling you this is the right solution for you. You should not pay off your mortgage. You should do this. You should do this. Okay. And break the FD every time the FD matures, break it and don't let it get basically just break the FDs completely, right? Use this FD money to buy the S&P over 5 years. Keep doing this. You're guaranteed to receive much better return on your money than 2.75%. You should go Google and see how much it is. In my whatever research I have done, it according to me it is about 6 to 7%. So 6 to 7% minus 2.25% is what you will be making money, and this money you will make forever. So you shouldn't sell this house also. Okay, because you got this at 2.75%. This is pretty much free money you got. I have made an entire video on this, but I'm just making this video specifically for you. So what you should do is this money will forever be coming to you. Then you can go to India also. You can go to India also if you want to. Just saying, this is such a clean source of money then. This is such a clean source of money that you will keep making money forever. And your kids will also make this money. I know a lot of people who made this mistake. So don't make this mistake. You got the money 2.75%. That's very low interest rate. You can easily make 6-7%. Make that 6-7%. I gave you the entire formula to ensure how to make that 6%. Making sense? Don't put all the money at once. That is part of the formula. Don't violate that rule. And put it in S&P 500 only. Don't violate that rule also. Put it in either FD. Then there is a money market account of Vanguard where you can put, and it will, in the account itself, keeps on giving you money. So money market account is invested in bonds and muni bonds and all those things. So it gives you 6%. So that is also something that you can rely on for 5 years. In that case, you don't have to do FDs and all that. So you can fine tune that. But there is a bit of a risk because money, it's at the end of there is a money market account. What if something goes wrong? Anything will not go wrong. Within FD, something can go wrong. I'll tell you one. Your FD, like per account, per person, there is a limit of like 250,000. You should check out this exact number from FDIC insurance and all that. So you should check, and then on the basis of that, you should make FDs. Don't make any FD more than $250,000. I know that it is per account. So you should check it. Is it per account, per bank, per person? You should check it. Or it's all three or two of the three. You should check. Okay. So basic analysis you should do. But I've given you a very good strategic action plan with all the places where you can go wrong. Acha, never buy equity. Many people will come to you, oh, this is 6%. I'll tell you which share to buy, which is 12%. Oh, if you had bought Apple at 2006, it would have been 20% to higher. No. Don't get into that. Then you lose all your money potentially. You can lose your money also. So don't get into anybody's trap. Okay? Don't get into anybody's trap. I have perfected these formulas over a long period of time by analyzing, reanalyzing the strategies, and these things. The S&P 500 is like FD. You cannot confuse an FD kind of return to equity kind of return. I made multiple videos about that. So you should watch all my videos to understand. There are a lot of secret shortcuts I have given. There is a good assumption of mine that you don't have green card. So I've given videos about how to get green card also faster. So that has nothing to do with this discussion, by the way. But you can see a lot of secret shortcuts in my entire portfolio. In my all the videos, there are a lot of secret shortcuts. Videos are a little long. They are not as crisp as this one is, but still they have a very good message. And you will see that in every video you'll get some message will be very useful to you. Okay. Anyway, so I've given the entire message. If you still have any questions, ask me. But don't get into the trap of equity. Don't get in the trap of buying anything directly, like muni bonds. Don't buy directly because municipalities go bankrupt. Use S&P 500. Don't invest all at once. Invest over 5 years, because I'm assuming it's a big amount, $1 million or so. So if it is $1 million, then you should do it judiciously. Okay, that way I'm telling you, right? Don't buy any real estate in India. Some people may say, oh, in India, in 2 years money doubles and all that. Don't do all these mistakes. There are a lot of videos I made where I'm saying that for NRIs, it's very hard to manage the property and all that. Okay. So I made this video entirely for you. Please do like and comment. And if you like it, say thank you there. If you have any questions, feel free to ask me. And if possible, subscribe and share also so that everybody can utilize this. Thank you.